Does a 50-year mortgage actually make sense? And does it help solve the housing crisis here in Los Angeles? Stay tuned and watch this video. Will a 50-year mortgage actually make buying a home in Los Angeles more affordable? Or does it make the housing crisis even worse while costing you hundreds of thousands more in interest? Today, I'm breaking down exactly how a 50-year mortgage works, how it compares to a 15-year and a 30-year loan, what the real monthly payments look like on a $750,000 loan at 6.25%, and why this type of mortgage does nothing, absolutely nothing, I'm telling you, to fix the real problems in the Los Angeles housing market. And before we actually dive into that, if you see my name pop up on your screen and these videos help you understand the Los Angeles real estate market, please make sure to hit that subscribe button. With over 250 five-star reviews, my goal is to give you a real honest, data-driven insights that actually help you make the best decisions possible, whether you're buying or selling. All right, so a 50-year mortgage is exactly what it sounds like. Instead of paying off your home over 30 years, the loan gets stretched out all the way to 50 years. Now, the reasoning behind it is simple. If lenders can't make the price of homes cheaper, they can at least make the monthly payment feel cheaper. And for a lot of people in Los Angeles, that idea sounds like a lifeline. You see, that's maybe true, but a lower payment does not mean the home is more affordable. It just means the debt is stretched out much longer. And we're talking much longer. All right, so let's look at the real numbers on a $750,000 loan at 6.25% interest. On a 15-year mortgage, your payment is about $6,393, and you pay about $401,000 in interest over the life of the loan. On a 30-year mortgage, your payment drops to around $4,616, but your total interest jumps up to about $912,000. Now, on a 50-year mortgage, the payment drops even further. So this time it would drop around $4,031. But here's the part that gets buried. Your total interest over the life of the loan is over $1.6 million. That's right. That means you paid $750,000 more in interest than the 30-year loan, and about 1.2 basically over that 15-year loan. That's absolutely crazy. So you're not getting a better home. Basically, you might be getting a nicer kitchen, but you're basically paying the bank for a much longer amount of time. Now, it's important to be fair. There are benefits to the 50-year mortgage, and the biggest one is kind of obvious. Your monthly payment goes down. And in a market like Los Angeles, where rents are sky high and they continue to skyrocket and affordability feels out of reach for a lot of buyers, lowering the payment can help someone finally walk through the door into home ownership. You see, most people don't stay in their homes longer than 8 to 12 years, and that's what the average is right now. And so if rates continue to drop, many plan to refinance long before the 50 years are up. For some buyers, especially first-time buyers, it can be better than renting because at least you're building something, right? No matter how slowly. But now we have to talk about the bigger issue and the part that impacts the entire city. See, stretching out mortgages out to 50 years doesn't do anything to solve the real problem in the Los Angeles housing market. And that problem is supply. A 50-year mortgage doesn't create more homes. It doesn't make it faster or easier to build. It doesn't open up new land. It doesn't fix restrictive zoning. It doesn't speed up approval. It doesn't lower construction costs. And it doesn't even create more starter homes, and it doesn't support builders who want to produce entry-level inventory. So it simply lets more people qualify for the same limited amount of homes that we already have. And when more people can qualify without more homes being built, well, the demand goes up while the supply stays flat. And what happens when demand rises but the supply doesn't? Prices go up even more. So this is the opposite of solving affordability. It doesn't do anything. So Los Angeles does not have an affordability problem because people are bad with money. Los Angeles has an affordability problem because we haven't built enough housing for decades, and the cost to build is higher here than almost anywhere else in the country. Very few places are more expensive. And if we want real solutions to the housing crisis, we need to address supply head on. That means we need to make ADUs and junior ADUs easier to build. I know a lot of people don't like to hear that. We need to expand by right approval so homeowners aren't spending 18 months waiting for paperwork. That's another big one. And we need zoning reform so neighborhoods that can support more density actually get more density. We need more multifamily housing near transit, near job centers, and near freeways so people don't spend 2 hours a day driving across the city. We need to make it easier and cheaper for developers to build starter homes instead of just luxury units, which is what we see most of the time. We need incentives for builders, tax credits, fee reductions, and faster approvals. When they create housing that working families can actually afford, well, that's going to be the solution. We need to modernize building codes so they align with today's construction technology. And we need to reduce the mountain of regulatory fees that can add basically $1,000 or more to a single unit before construction even begins. That's just asinine. So none of this is solved by a 50-year mortgage. You see, a 50-year mortgage just pushes the problem further and further and further down the road while asking buyers to pay dramatically more in interest. And so it's a temporary tool that helps some people qualify, but it doesn't change the underlying math of our housing shortage. Now, does this mean a 50-year mortgage is a bad idea? Well, not for everybody. Not at all. You see, for some people, it might be the perfect stepping stone. And if you plan to be in the home for less than a decade, if you're comfortable with the payment, and if you understand the long-term cost, it can absolutely be a way to get into a neighborhood you love and basically start building equity, even slowly, rather than watching rent increases every single year take place. But it's not a miracle solution, and it's not a policy fix for the city for sure. So before you consider a 50-year mortgage, the most important thing that you can do is essentially understand the trade-off. Lower monthly payments today in exchange for dramatically higher interest costs over time. And if you want help comparing these numbers, well, basically, if you want to see them side by side, or if you're wondering whether buying or renting makes more sense in the current Los Angeles real estate market, feel free to reach out to me. I'm Scott Himmelstein with the Scott Himmelstein Group, and I'm always here to help you navigate these decisions with real data, real experience, and no agenda besides helping you make the smartest move possible. Thanks for watching this video, and don't forget to subscribe to our channel, and I'll see you on the next video.